Welcome everybody to this month's installment of the Intentional Success webinar series. We're going to have fun today because this is the Q&A session, which means I've prepared very little. I do have some scratch notes. I'm going to wander over to the whiteboard here in just a minute. The onus is on you. This webinar, you can make or break this webinar depending on what you do right now, which is post a question. So if you'll use the Q&A box for questions, it'll really help me out. I'll try and watch the chat as well, because I know sometimes that's just where questions go, but it could be about anything. I had a guy in group the other day. We got into a whole discussion about serialized and non-serialized items. I don't care how minute it is, how deep in the weeds it is. This is your time. Ask anything you want. And you can ask the big questions too. You know me, I'm always prepared to talk about our industry and what's going on in it and how it affects you and what you can do about it. So that's what I'm here for. If you are new to these, you picked a heck of a one to join us on. I'm Tom Stimson. I'm president of the Stimson Group. I'm a business consultant who used to push road boxes for a living. So I work exclusively with owners and management teams, and don't tell anybody, in the live events industry and really nowhere else. So I work with folks who do shows for a living, from the AV, concert touring, even theatrical markets. These are my people. This is what I do. I love this industry. I hate the challenges and the sacrifices that many of you have had to make over the past 2 years, but I love the opportunity to help people work through all of that. And we've done some really good work. You guys have done a great job making adjustments over the past 2 years. And whenever you feel down, pause and give yourself a pat on the back, because you deserve it. I mean, you're here, right? This is being recorded. Hopefully, I always check right about this time to see if that's true. Yes, I did click on record. It'll be up here in a couple hours, well, probably 30 minutes after this event is over. I'll have it posted, and you'll get an email at the end of the day with the link of where the replay is. If you have that link from before, it hasn't changed. You'll always find the most recent replay there. And feel free to share it with other folks, whatever you want to do, watch it together with your team. It's yours. But then in 30 days, it disappears and we'll replace it with another one. Questions in the Q&A box, chat, comments, say hello from where you're at. Let us know where you're watching from. We're one big old family here, but we're often from all over the world. So it's always exciting to see who can come and visit these things. So yes, I'm a business consultant. I do work with owners. I work with companies. We do change. I give advice. I coach. I teach things. So if you have a gap, if you're stuck somewhere, let's at least have a conversation about it, and let's make it an honest conversation. I'm very forthright. I'm often a little bit blunt, but it's because I'm trying to help you in the most expedient way possible. I'm looking for a straight line to your results, but sometimes we have to take that windy, curvy road, and I'm going to be honest about that. So if there's something that's keeping you from moving forward, that's what we should be talking about. That's where I can help. So if you can go to my website, you'll find a way to book an introductory call with me, or just go to the Let's Talk page on my website. And I look forward to visiting with you. You'll get to hit my calendar and see when I'm available. Quick shout out, plug for Les Goldberg's The Road Ahead podcast, because I just recorded an episode with him about 2 hours ago, which will be out later this afternoon. And we talked about, big surprise, spoiler alert, labor, the labor crisis. So some great panelists there, some really smart people. It's a good listen. I've listened to many of Les's podcast series. This is all came about during the pandemic. He's done some great stuff. He knows some wonderful people. I'm always honored when he calls and says, he needs me on this panel. So take a listen to that and subscribe, listen to it. Let's see. Next month's webinar, I'm going through all the housekeeping stuff because I'm going to dump these slides here in a second and go over to my whiteboard and start working on these questions that you guys are posting. Thank you for posting questions. We're going to talk about why everything's harder now and how do I start fixing it. So, there are coping skills that successful people have when things get tough. And when things get tough, there's a lot of noise. Sometimes it stalls you. I'm going to talk about how you start fixing that. How do you keep your business on track in spite of all the things that are going on that seem to be pulling you in other directions? That will be next month. I think it'll be very timely because you'll probably be even busier then than you are today, because that'll be in the middle of graduation season. My quote for the month, I have fun researching these, and this one, boy, talking about the labor crisis this morning, and I replaced my quote after that conversation with Les's podcast and put this one in instead. You're putting all your effort into pulling a rope and then blaming the other side for your blisters. Man, unpack that a little bit. Think about that. And that's often what we do. And in my role in the industry, which is a lot of speaking truth to power, I got to remind some people, you're the one pulling on the rope. You had another option. You had another choice. Surge in demand and the shortage of labor. So there's a known surge in demand, and there's a corresponding shortage of labor. And whose fault is it that you're in pain right now? So own some of this stuff. As I said on the podcast this morning, I said, I don't see this as a labor crisis. I see this as a sales crisis. Think about that for a minute. All right, get those questions up here, and I'm going to wander over to the whiteboard and see what we can do about all this. Let me change my share. Don't you love technology? I know there's probably a really fast, cool, sexy, groovy way of doing this stuff, but that's not me. Fast, groovy, sexy, just not my thing. All right. First question I have here is, how do you think small business fundamentals like high free cash flow and low working capital, usually applied to retail and manufacturing, translate into rental and staging? Since we try to sell solutions and not just widgets on a shelf, how are we different and how are we the same? Dang, that's an MBA level question, Scott. Thank you. That's a really good question. I have been saying for years, and I'm always happy to agree with you when you say our industry is unique and your business is unique, because I'm not going to change your mind about that. Well, not quickly anyway. But the fact is, we have been and always will be the same. We're a highly capitalized business, but we fell in love with capitalization to our detriment, and it was reflected in our poor balance sheets, our high loan rate, high debt to equity ratios, and things that made us unattractive to investors. It made us look very, very risky. And the reasons for doing all of those things were our response to the changes in the marketplace. One of the things, just as an example, in this labor crisis, one of the reasons we have a labor crisis is that we've had our labor force has shrunk, but the number of available freelancers isn't really that much less. It's all the staff people that we used to have who've moved into other staff careers in other industries. They didn't just go into the freelance market. And it's because prior to the pandemic, most of us were very, very overstaffed. And because we were overstaffed, we had to keep those people busy, so we sold on price. When you sell on price, you resent the fact that you've got to sub-rent equipment, so you buy more equipment so that you can keep more of the money, so that you hire more staff, so that you can sell more jobs, and see how this keeps working. We spiraled out of control. So the business fundamentals are still the same. This is an industry that can throw off a lot of free cash, but we probably need to reduce the amount of cash that we're rolling back into capital purchases and be happier with higher profit. Oh, wait a minute. There's an idea. So there's a more balanced way of running businesses, and that's where I'm working with my clients, is helping them find that balance that will give them the maximum return on an eventual exit strategy, or just for building their retirement. Your business is working for you. Let's make it work smarter. So I think whenever we have the opportunity to go back to business fundamentals, and even if it's difficult, figure out how to apply them to our industry, it always works. It always works. I help other friends with their businesses in different industries. I've helped the karate studio I used to work for. It's all the same thing. My advice to them is not that different from my advice to you. except that the nature of your sale, your transaction is different than a karate studio. The business fundamentals really aren't. So I hope I mean, that was a 60,000 foot question. I hope I gave you at least a 40,000 foot answer. Thank you for that. Another question here. What was your short answer to serialized versus non-serialized? So I can see how we stack up. One of the guys had a great, let's see if I've got it in my notes here, had a great response to how he looked at this. But the long and the short of it is, if it breaks and you don't care, you just throw it away, then it's non-serialized. If it breaks and you care, it's serialized. And I think that was really, that was the fundamental difference between the two. So for, I may want to barcode every cable that I own, but I don't want a unique bar cable for every cable that I own. And I may fix a cable, but the fact is, do I care that the cable's broken? Or do I care which cable is broken? No. Nobody's going to file a show report that says, 50-foot mic cable with this serial number is broken. Please find it in the bin and fix it. But they are going to tell you when, your switcher system is down or a main component of your system. So those are the things we want to serialize. So yeah, look forward to see how you stack up on that. Let's see. Let me clear a few things here. Keep the questions coming, folks. I've got a few other things I can insert in here as well. How do you feel about the rise of inflation and the new possible upcoming recession further affecting our industry? Should we be concerned? Okay, sure. Why not be concerned? Is there anything we can do about it? No. So let's go back to that first question. If we're doing good business fundamentals and we have a business that is scalable, okay, then we are going to weather a recession much better than the companies we were 2 years ago. Right? Bottom line, reduce your overhead, rely more on outsourcing for doing the direct work in your business, change your business model and mindset that you have to have everybody on staff and all of your own equipment in order to be a successful event purveyor, because you don't. And then recession won't be your biggest concern. And if this is my personal opinion, and I'm not an economist, but my personal opinion is that when we have a recession, it's going to be like the 2007 recession. It's probably going to be focused on commercial real estate, which means it's going to be a big deal. But for most of our customers, unless you're in the financial services sector, if that's your primary business, then you should be concerned, but you're going to know about it first. The rest of us probably won't be impacted in quite the same way. So we'll see. We'll see. It's always a concern, but we've got to plow ahead and make the best decisions we can, and the best decision you can to prepare for a recession, which will always come. Recessions always happen. The question is when, is to be scalable. Make sure your business can make money at the size it is now, that you can make money in busy months and slow months. Okay, that's what scalability is all about. Inflation, yeah, there's a huge amount of inflation, especially in fuel and the cost of energy. That's where a lot of our inflation is. That's affecting a lot of things down the line. It's raising manufacturing costs, which are raising product costs, yada, yada, yada. Right now, and you are charging more, right? You're part of the inflation scheme. Your supply chain is constrained, so you've raised prices, you charge more for labor, you can get more for your equipment. A job you would have done for $50,000 3 years ago, you're probably doing for $80,000 now. You're part of that inflation. The fact is, spend is a choice, where companies choose to spend. And as long as meetings, as we've always believed, are an essential service, that companies have to have meetings, whether they're in person or virtual, okay, as long as that's essential, okay, people will make the choice to spend money on meetings, and they will curtail somewhere else. And that's part of what reduces our risk going forward. Now, in the case of a pandemic, all of that was off the table, right? The risk of having a meeting was high, if it wasn't actually forbidden. But that's not what our new normal is, which brings me to the question that's not on here, but I expect to have it, because a lot of times I do a pandemic business outlook at the beginning of these webinars. And particularly in the United States and wherever you are watching from Canada or from Scotland or South America, wherever you're watching from, you all tell me this, you say, oh yeah, we're 3 months behind you, or we are 6 months behind you in the US. So take this for what it's worth. The US is moving into the endemic stage. People are trying to get their masks off so fast. There was a court ruling the other day that probably temporarily stripped mandates for masks on public transportation, but it may not come back. And people, boy, they were thrilled. So there's a lot of people who are willing to risk to accept the lower risk of getting ill with the freedoms of finally opening up business and society a lot more. So you're not far behind us. We are moving into that endemic stage where, like the flu and the regular seasonal flu we all skate around and maybe get flu shots for is also a form of COVID. So the COVID that we're dealing now, from what I understand, will become more like that over time, and it'll just probably be in our flu shot every fall or maybe even twice a year. So let's see, next question. If you are registered, how long do the webinars stay available to view, and are they downloadable? They are not downloadable. They are housed on YouTube. You can watch them on my website. You will get the link after this webinar ends later today. It is up for the next 30 days, and then that page will be replaced with next month's webinar. So they're now not downloadable, but enjoy them as many times as you would like between now and the next webinar. All right. Hey, are we having fun yet? All right, keep those questions coming. I had a question from that a client sent me asking about credit card fees. And this, obviously right now, a lot of clients are paying by credit card for a number of reasons. And that whole issue of the credit card fees and credit card fees are going up again. How can we pass that back on to our customers? Well, I would say for the most part, I've always been the advocate that, your pricing includes the cost of financing. If the customer uses a credit card, that should already be baked into your pricing, that expectation. And let's face it, why would we deny our customers the convenience of doing that rather than, goodness gracious, writing a check or having to work out a wire transfer of some sort with their bank? Now, having said that, consumer habits are changing. And very often you will notice, if you've been following me for a long time, I will change my advice depending on which way the wind is blowing. And right now, the way the wind is blowing and the fact that our customers have evolved a little bit, our buyers are different people than they were a couple of years ago. We are getting closer. Corporations are letting us get closer to the procurement decision makers and the procurement department, the buying systems within corporations, and they want to pay with credit cards. They get the rebate for their corporation. It's very convenient, or they're using some sort of bill paying system. So having said all that, because of the way consumer behaviors are changing, I'm suggesting to some of my clients, particularly the ones that do smaller transactions where they do a lot of rental delivery setups, a lot of jobs that are less than probably $30,000 is their primary business, and lots of $1, $2, $3, and $5,000 orders, which many people will want to pay by credit card, is to put what's called a non-cash adjustment onto your invoice. So basically what this means, and you'll see this in restaurants are doing this now as well, that they'll say, here's your bill, it's $100. But if you pay with cash, you can pay $97. That's called a non-cash adjustment. So what it's saying is, as $100, your credit card fee is baked in, but if you want to pay for cash, I'll share some of that savings back with you as a supplier. So we're seeing that particularly on smaller transactions. We have an equivalent version of that in larger transaction based on time, in which case I can say, thank you for your event. Here's your $100,000 bill. The terms are net 30 as we agreed. However, if you pay this with a net 10, I'll give you a 3% discount. So most corporations will take that. Most people who write checks are incentivized for saving money. And if they can save money by writing a check now instead of 3 weeks from now, they're going to take that. So I do recommend putting either one or both of those into your billing system and your billing relationships, and reduce some of the friction to one, getting paid, and two, save a little bit of money on some of those credit card fees. Now, don't pass all of your credit card fees off to your customer. I mean, it's a little bit, it probably won't fly. You're typically, what I'm seeing in non-cash adjustments between 2 and 4%. I looked at some other industries. Let's just settle on 3%, because I know that from a purchasing standpoint in corporations, 3% gets people attention. 4% is a slam dunk. 3% is a 90%. 2% is 50-50. So half the people will take you up on the 2%. 80% of them might take you up on the 3%. Most everyone will take you up on the 4%. At least 90-95% will. So think about that. If that's one of your pain points, it's worth taking a look at. Okay, another question here about capital purchasing. What do you believe is a good approach to making capital asset purchase out of cash flow versus borrowing? Suggestions for a working process with sales and ops on determining ROI. All right, capital purchases, first of all, should be part of your budget. What it needs to be for your company is going to vary. So I don't have a stock number. Back in the day, 2 years ago, I would have told you that if you're a high-end corporate event staging company, your CapEx budget should be somewhere between 7 and 10% of revenue on the average over multiple years, which doesn't mean that some years you're not going to spend more and other years you're going to spend less. If you're a regional AV company, where technology and the latest technology is not quite as critical, your CapEx rate might be, somewhere between 4 and 8%. If you're hotel AV, it's 3%. Sometimes it's 0. So depends how long you've been in that property, but 3% is generally a good number. Now, what am I looking at today? I would take a close look at what your revenue mix is and how that revenue has changed. For instance, if you built a studio and that studio is keeping busy and doing hybrid events as part of your post-pandemic strategy, then capital expenditures to invest in a permanent studio, it's a good return. It's a long return. You could probably amortize that over many more years, which means it'll have a minimal impact on your annual P&L. So that's a good investment, and that's a surprisingly good ROI when you go back and do that math. Otherwise, I'm looking at my subrentals and how often I'm having to subrent something, and then how much time and labor it saves me by owning it instead of subrenting it. Now, for some of you, you think everything is time intensive and labor intensive and subrental intensive, and you're biased toward making that capital purchase. If that's who you are, and if in order to be profitable, you feel that you need to own something, or your numbers are telling you that you have to own it to be profitable, my recommendation is, find someone to help you look at your balance sheet and look at your P&L, because I believe you probably have a pricing problem, and that you're underselling things, you're leaving money on the table. And when you leave money on the table and you sell on low margin, you commoditize your services, the economic indicators suggest that you should have more people on staff and own more equipment, which is completely counterintuitive, but that's what the average business owner would do. In fact, that's what our industry has done for the past 25 years. So the good approach is to, one, have a budget and look at the ROI of each thing that you purchase. My formula for this is still the same, in that I want 50% of my budget my CapEx budget to directly reduce expenditures expected common recurring expenditures. I don't own enough wireless mics. I don't own enough flat panels. I don't own enough LED, and it's going to reduce my sub rental. I want, of the half that's left, I want 25% or half of the remainder to anticipate growth. In other words, we see this growing, we see this trend, and I want to meet that trend and get ahead of that trend. And it's preemptive buying. This is the strategic buying, which is fun to get into. And when you're right, it pays off great. When you're wrong, yeah, okay, not so much. And then that last little bit, I'm going to always hold back for discretionary, because you don't know when your next new best client is going to come in and ask you for something that's out of your wheelhouse, or they're going to give you more work if you know how to do this. So as we're trying to attract more clients and work maybe less with agencies and resellers who are taking our work and marking it up and reselling it, we're working more directly with the corporations, which is one of the byproducts, the good byproducts of the pandemic, is we're dealing more directly with end buyers. If they come to you and say, hey, do you guys do video editing? We have this whole department we'd like to get rid of, but we need somebody to do video editing. Your answer needs to be absolutely, of course we do. We're happy to help you with that. And you go out and you buy the rig and you do it, and find the contractor or somebody who may one day become a full-time employee. So yeah, have some money available to meet that need and say yes. But I always want you to rely on your supply chain first. Don't buy something just because it's hard for you to get. You haven't worked hard enough at making it easy for you to get. B2B supply chain, all of you guys on the call right now should be doing business with each other. If you haven't maximized that, then your CapEx expenditures might not be wise. Suggestions for a working process with sales and operations on determining ROI. All right, I'm hesitant to answer that part of your question because I tend to get a little bit snarky about this. These are not the best people to determine ROI. This is a finance question. Find somebody who's not biased as biased. Sales is going to be biased to, how do I make my job easier? How do I offer the customer a new shiny object? Give me something else to talk about. This is you spending CapEx to compensate for somebody's lack of ability to sell. Or operations, which is they want the next sexy thing. They want the easier thing. They're tired of doing it this way because it's not as cool. Technicians in particular can get a little bit tired of running the same console year after year. I mixed on the same Yamaha 1604 console for like 12 years, and I loved it, which is probably why I don't know how to run a digital console. But my point is, this is a business decision. Business decisions are not always sexy. Okay, let's bring some more questions in. Oh, let's see what I've got going over here in the chat. All right, somebody in the chat posted, outside of the talent shortage, what do you feel is the biggest obstacle with the success of the industry? And well, first of all, let me say is I don't think we have a talent shortage, but I'm going to talk about that in just a minute. I want to reframe that concern for you all. The biggest obstacle with the success of the industry is that most of us don't know our own numbers well enough to make sound business decisions. And that's not just a plug for hiring consultants with MBAs and all that kind of stuff, because when I was in your job, I had the same problem. I was taught business finance by another AV person. While he was very good at it, he also learned some of it from AV people. And sometimes we're not the best people to learn math from. So I think what we need to do is get more in touch with the business. Going back to the very first question at the top of the webinar, we need to get in touch with our business selves and remember that we are a business. Business rules apply, business acumen applies, business strategy applies, and we will run a better business if we focus on the business of the business. And oh, by the way, we still get to be experts in AV or experts in live events or touring or theater or whatever it might be. But the really successful businesses, if you look around our industry, are people who are great business people. And they know what their numbers mean. They know what the changes in the numbers mean. They know how to interpret things. And that's very, very important. All right, I'll keep bringing some questions on. I'm going to have time to get back to you. I want to talk a little bit about this labor thing. I've had, I've had more conversations with old friends in the industry about labor in the past 2 weeks than I have in years. And it's because everybody's rattling, every book. I guarantee you that if I knew how to do anything technical anymore, I could have a gig tomorrow, because everybody's hurting that much. They would, bring a desk jockey like me back out on the road. So labor is a big deal. But here's what we found out, and this is a little bit about the podcast I was on earlier too, because we said the same thing. What we found out is that, a segment of our community prior to the pandemic were freelance people. And for the most part, we've probably seen 80% of the freelance community is still back, of the high-end freelancers are back in business. They're still out there working. We had a big chunk of folks who were staff and staff technicians, and a few of them have become freelancers, but most of them have gone off to other industries, but then you've kept a few of them, right? So we've got a few of them left. And the rest were entry level for hire, stagehands, breakout room technicians, the folks who we often call them no name, no blame people. In other words, I don't need to find the best person in the industry. I need to find somebody who does this. And this is where the staffing companies thrive, is providing a lot of these people. If you're going into another city, you're not trying to, find the best, freelance audio engineer in that city, because you probably brought that person with you. But you do need the hands to help set it up. And that's where we're seeing most of the shortage. Now, some of these people have become some of these people and have had the opportunity to move into positions of more authority, more responsibility, and more skill. Just like many of us, I grew up doing this in the 80s and 90s. If you showed that you were competent at doing, well, just about anything, somebody would give you something harder to do. And they would teach you how to do the next thing and say, well, you're a competent person. You show up, you present well to the client. Do you know anything about this technology? You say, no, I've never set that up. Well, come on into the shop. Let me show you, because I need you to go do that next week. So those people who have that kind of aptitude are finding roles, and all of a sudden they're in front of a vMix rig, or they're even going out on the road, setting up LED and that sort of thing. So those people are out there. So when I say there's not a labor shortage, because, well, Tom, there is, because, half of these people are gone. Okay, a few of them are here. This is a little bit smaller pool than it was before, and this is a much smaller pool than it was before. How is that not a labor shortage? Well, we aren't doing as many shows. We have the labor force we need. What we don't have is what we had before the pandemic, which is a huge amount of redundancy. Because if you looked at the busiest week of the year, okay, everybody's got shows stacked, okay, for the most part. But there's always companies that have nobody working on certain days. Always. Because everybody's overstaffed. So you have as many people as you can on staff. The union has more people on their call sheet than there's going to be work for. 25 days out of the month, but 5 days out of the month, everybody's working. Okay? Freelancers, a good freelancer is going to work 15 or 20 days a month. Okay, so we were never tapping out the labor market. We may have had to look a little farther. We may have to grow our bench a little bit, but the fact is, the entire industry was overstaffed, and the result of that was it drove wages down. When wages are down, you don't attract fresh blood, and you end up with a bunch of old people who are making the top tier money. You end up with a lot of stagehands, of which we get really high turnover because there's not enough money to stay in the business. And you get staff people who they want to stay in the same job forever, and they want to make more money every year. but you can't sell them for any more money because the market is keeping the day rates down. So you start getting upside down on that. So this is just a horrible scenario to be in. So my point is, we're not in a labor shortage, we're in a sales surge. And we have more demand than we have supply, or supply is adequate for keeping everyone busy. Most of the people who are suffering right now have sold beyond their reasonable capacity. They said no too many times out of fear, out of ineptitude, out of anxiety, out of hope. We took one more gig or two more gigs or five more gigs because it's that feast or famine, right? We remember being so poor 2 years ago that how can you turn down any business? You know, our love of revenue has kicked in and we've made some bad business decisions. So we have to weather this storm, right? I'm not saying that you're not having a crisis of labor because you have sold jobs and you can't staff them and you've turned over every rock and you've called every person and you still have a job next week that doesn't have people on it. So let me give you a couple of tips. This is old guy stuff. This comes from anybody who's worked in conventions where you're doing a general session and you've got 150 breakout rooms. You guys know this stuff. Bring it back. We know this works and we know this will work now. A couple of tips. So what can you do right now to help make this a little bit easier over the next 6, 8, or 10 weeks that you're swamped? Is don't stop looking, okay? You know that. Just because you filled the crew positions, okay, fill 10% more. Just keep hiring. Don't let your labor desk or anybody else stop hiring. If they find somebody who's available, find what dates they're available and just book them. You'll figure out what to do with them, because I'm going to tell you the next thing to do is send extra people. If you have extra people, send it. Why? Because on whatever crewing list you haven't provided for the fact that somebody's going to get sick. And we're still in the pandemic. The likelihood of somebody getting sick and not showing up, or on a big crew, 2 or 3 people, is extremely high, and you have no buffer. So you should be over crewing your shows. If you got a crew of 4 people, you should send 5. If you got a crew of 10 people, you should send 12. Find your number, but you need to do it. Not just on the stagehand level, you need to do this up at the high-end technician level. Book extra people. When you're doing that, you're creating trainee seats, because I'm not going to send a crew of 10 top-notch people and 2 extra people and tell those 2 people to sit in a corner because they don't know anything. I want to take my 2 best people and pull them off their seat and have them stand over somebody else and put them in a seat that they can accomplish. Another thing that you can do on this is split jobs, split the roles. Okay, where salespeople love to do this. They love to sell a position because, oh, I know Bob's available. Bob can do this, and he can do the job of 3 people. So I can sell 1 Bob instead of selling 3 show positions, and my price will be lower and I'll win the job. Well, shoot me. Bob's not available. Never sell a job that only 1 person could do. Break it into the 2 jobs that it should have been broken into, or the 3 jobs that it should have been broken into. And you can take the roles that you have right now and take the jobs that are super specific about who can do it, and you're limited about who you can hire, and break it into 2 jobs. Oh, what about the cost? Who cares about the cost? Your biggest concern right now is getting the job done. This is not your client's problem, though very often they will let you have an extra hotel room. They will accommodate some of this, but you don't have to make it their problem. This is to cover your butt for getting yourself into a situation. And the client's not going to give you a pass when the crew a quarter of the crew doesn't show up for the event because, oh, well, there's a pandemic on and there's a supply shortage. And they're going to say, well, that's why I hired you, because you shouldn't let those things become my problem. Don't let them do that. Now, you've got that done. Okay, what can you do next? Okay, so before you hit your next surge, start doing these things. Book, I've said this before, book freelancers first. If you've got staff technicians, we can have a conversation about whether or not that's the right choice for you. But if you have staff technicians, Do not schedule them on any shows. Book freelancers first. Hold your staff people back. Hang on to them because you need the floaters. You need the people who can step into any seat. You need the people who can mentor and train the people that you're putting into those extra show positions. Okay. Not all of your technicians want to have that role. That's something that you're going to have to work out, but you've got time to work it out. So book freelancers first. I already talked about selling, putting in more positions. Now I want you to sell more. So now going into the future, quit trying to price jobs to win, price jobs to succeed. And the way jobs are going to succeed in this supply chain problem, this labor problem is not going to go away. Sell more roles. Well, Tom, I can't find people now. Right. If you sell more roles, you will never stop trying to find people. Put some pressure on the problem to get it solved. But you sell more people, and those roles, because they are simpler, are going to be easier to fill, easier for you to drop a trainee in, easier for you to send a floater, one of your staff guys, in to help cover that job. And rather than put redundancy in crews, put a floater in who could drop in on a show for a day or two of load in, or a few hours of load in, depending on the gig. Put in some time there and say, hey, this is under control. I'll come back and check on them, tomorrow afternoon, but I think they're fine. Go to the next gig. And then future. Oh yeah, and yeah, keep the key staff unscheduled as much as possible. You need those people that you can rocket ship into jobs if anything goes wrong. So hold some people back. And now in the future, okay. And this is how, those of you who know my history and know how I came up in the industry, I was a staffing guy, I was a labor guy first, and I went to work for a company, and that company did a really good job of putting freelancers on a pedestal. They were our greatest resource beyond our own staff. We treated them like family, and make sure that your freelancers are part of your family in whatever way that needs to manifest. Down to inviting them to the Christmas party if that's what you need to do. Keep your staff techs free, use them for fill-in. So staff, and again, not all staff technicians want to do this. Use them for the one-offs. Use them for that one-time client, that one-day show. I'm going to get hate mail for this, for those crappy midnight load-ins. That's the staff. If you're going to have staff technicians, that's where you need them. These are the crap jobs, and trust me, I did them. I'm not telling you to do anything I haven't done myself. I was the guy who, the A team went and did the fancy show at the golf resort. I'm the guy that showed up to do the midnight load in and walked away when rehearsal started and went on to the next gig. Right? There are people like me who are happy to do that. They like that kind of work. That's a great person to have on tech in the future. None of this is going to happen overnight. So if you're a freelancer, and I do get freelancers on here, and you have any open dates in the next 10 weeks at all that you want to sell, I want you to reach out with the specific information to the companies that you really want to work for. Maybe they've never hired you before. Maybe you don't feel like you're their caliber. Get over that. You're better than you think you are. Okay. Contact their labor coordinator and say, hey, here's who I am. Here's what I do. I have these dates open. If I have any other dates open up, I will let you know. And keep updating those people. Keep sending out those dates. There's no reason at all you can't be completely busy in doing that. And very often what those people can do, they can say, hey, I don't have a position for you. Well, wait a minute. If I take this person off of this job and put you into that job, which fits your skill set, I can take that person and put them into another job, or I can take that person and they become my floater or my mentor. So don't underestimate what people will be willing to do who understand this business. I flew people across the country just to do load ins. So, the show comes first. We'll figure out the money later. But then ultimately, this is all about, selling better. So just keep selling better in all of this. This is our new normal for labor. Sell that way, budget that way, cost that way, staff that way, crew that way. And in 6 months, you'll have a better system. You'll be more comfortable, you'll be more scalable, and you'll start getting better and better people on your list. All right. Stepping down off of the soapbox. Let's see. Let's see. Labor shortage I'm finding in the surrounding industries, hotels, banquets, delaying our load-in and setups. Yeah, you're going, well, this is a good thing to know. If you're walking into venues who are short-staffed, which means things are going to be harder, I'm not above moving some banquet tables. You know, on more than one occasion, I've walked into a ballroom that hadn't been cleaned up from the party the night before, and I've paused the truckload and I've gone to the banquet manager who says, I've got 8 guys here. We can help you get this clear. And it's in your best interest to do that. And you're going to be best friends for the hotel, and the quality of your lunches will go up dramatically. Don't waste a good crisis. You know, jump on those things, find a way to help, find a way to be part of the solution. That's the industry we're in. We're in the problem solving industry. So let's solve them. All right, getting back, Scott comes back on getting back to ROI. What metrics do you look at? I have a coworker who only looks at revenue, another that only looks at sub-rental history. How do we have a balanced approach to this other than what you already said about having finance do it? Well, grab your screenshot. This is going away. All right, let me give you a crash course in financial review in the 5 minutes or so that we have left. Hopefully every month you close out that month's books and the bookkeeper sends out a report to management that says, here's the results. It usually has the month-end results. Maybe it's compared to the prior month. Maybe it's compared to a year to date. Maybe it's compared to the year prior. Whatever it's compared to, chances are it's probably useless. So I'm going to tell you to do something differently. Here's what I want to see. And here's the conversation I want you to have as a management team when you're looking at your financials. I want you to have a spreadsheet, and you have to have a spreadsheet because you don't have accounting software that'll do this for you, because this is not tax accounting. This is financial analysis. I want you to have a spreadsheet that has the trailing 12 months average. I want you to always look at an entire year, because that's your baseline of understanding. If you had a $10 million year last year and you're on the upward trend, this average will go up every single month. So I want to see what my trailing 12-month average is. If I know what my trailing 12-month average is on revenue, okay, and I see it going up or down, that gives me information that I care about. I don't care about a good month. A good month is a useless bit of information. It's probably more of an annoyance than anything else. But salespeople love good months because it's all about revenue. All I care is what's the trend I'm on. And if I look at the trailing 12 months average, because every month I'm going to update this and I'm going to hide a cell, I could open this up and run a trend line and say, what is our average over time going? Am I really increasing my run rate on revenue? I want to do a standard P&L here, right? This column is the average for the trailing 12 months. This is the current month. Okay, I did $1 million worth of revenue, boom, right? And this is either the year to date or the prior year, whatever other thing you like to measure against. In our industry, the prior month has nothing to do with anything. So I want to compare this. If it's March, I may want to compare this to March. I may want to compare this to year to date, or I may want to compare it to your budget, which should be advanced class. So if you're advanced enough to actually have a fiscal budget, then I want to compare this to the budget. My budget was 1.1 million. I'm off by 10%. Whoop-de-doo. Great. Now, all my P&L, I've got my different types of categories in my P&L. I've got, the old school. I have equipment, I have labor, I've got travel, I've got logistics, I've got production, blah, 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 blah. Okay. All of my key revenue categories broken out. Many of you don't. Many of you lump this. Many of you have oversimplified. You didn't know what to do with studio rentals, so you stuck it in labor. The other guy stuck it in travel. Figure all that sort of stuff out. Your income category should reflect what you do as a business. And then I've got cost of goods sold. I got income, I got cost of goods sold. I need to know what the cost of equipment was, which is subrentals. I need to know what the cost of labor, which might be 4 or 5 categories of labor. I've got some direct staff labor, I've got some freelance labor, I have some contract labor, I have subcontracted labor through a third-party provider, my travel costs, my logistics costs, right? Everything lines up. Every column has a percentage because I want to see the percentage of revenue for subrentals. So if my year-to-date subrentals is $850,000, and that is 8% of revenue, and then this current month I had $250,000, which was 25% of revenue. That's a huge outlier. So that's the kind of thing that in a management meeting, I want to explain that and why is it that way? And is it a problem? Was it expected? Did we make the right choice? Yada, yada, yada. So I'm going to explain the life. And then what was my budget? My budget may have been $100,000, which was, sorry, that would have been about 9% of revenue, right? So in cost of goods sold, I'm looking at these percentages and see how they're tracking. And very often what we'll see is on the current month, I had a travel expense of 50,000 or travel sales of 50,000, but I had travel expense of 75,000. And we want to know why. Okay. This could be a big problem. But if I go back and look at my travel expense, of 500,000 over the course of a year, and my normal travel expense was, my spend was 350,000, which means I'm spending less than I'm taking in, which is a good thing. It's called profit. This indicates an issue. Is it a timing issue? Was it a selling issue? Did we fix a problem with money? Just figure out what the answer is. Make sure it was the right decision. These are the things. I want all of these numbers to matter, but I want them all to be actionable numbers. Everything that's below gross profit, we call this below the line. This is above the line. It gets us to our gross profit number. Everything below that is expenses, which we also call overhead, which is mostly your fixed costs, the things that don't change by month. Revenue doesn't change expense. That's the definition of an expense. It's not changed by revenue. It's not significantly changed by revenue. Cost of goods sold are things that costs that we incur because of revenue. Therefore, they are wholly affected by revenue. I have changed my stance on this. I would have told you 3 years ago that you should put all your warehouse labor in here as a cost of goods sold. I may not tell you that today because it is not actually a direct expense as people that you're holding on in case you sell something. There's a lot of right answers to this, so don't change anything without talking to me. That's the conversation that I want you guys to have. Okay. This is going to tell me what's really going on in my business and what the trends are. This trailing 12 months tells me what is normal for a year versus what happened this month versus what we planned on happening. That's the conversation that management should be having. And what is the ultimate measurement of success? It's going to be profit, right? Now, there's lots of different kinds of profit, but I've had the net profit, which is down here, okay? But I also have gross profit, which is right here. And gross profit is what management generally has control over. They don't always have control over below the line expenses unless you're senior management or the owner. So for whoever's in that meeting, to the person asking the question, it's what are the things that they have some control over? And if our gross profit starts trending down, I can go back and look at the individual lines and see where that trend is coming from. Is it coming because our labor costs are going up, but we didn't raise our labor pricing? That should be fairly evident right here. And I can go back and verify that by looking into individual orders and looking at my price sheet, looking at my cost sheet, talking to the labor desk. And that tells me what I need to change. I need to change my labor prices. And salespeople go, oh, well, clients won't put up with that, in which case you should change your sales manager. All right, so answer that. What else we got to get here? Let me see if I can squeeze one more in, and I'll let you guys get back to finding crew for your shows for next week. I think we're pretty good. All right. I don't know about you. I had a blast. That was fun. Thank you for all your questions. Very high quality questions this month. I appreciate that greatly, and for keeping me sane by letting me work on some stuff and not having to generate a pre-built webinar this month, because like you, I'm also busy taking care of a lot of things. So keep your head up, keep selling, but sell smartly. Don't stop looking for labor. It's a never-ending job, but it's very rewarding. The better you get at it, the more effort you put into it, the more payoff you're going to have, the easier it's going to be to sell, because you know where you're going to get staff from. Take good care of those people, because they will save their calendars to work for you before they'll go work for somebody else. And that's the company I want you to be, is the company that freelancers prefer to work for. And if you're not, let's have a conversation. I'm here to help. We'll get you fixed. We'll get you into a position where you're making better strategic decisions, you're getting better outcomes, you're having a scalable business, and you're having fun, because if we're busy, we should be having fun. So thanks, everybody. Thanks for being with me. We will see you next month. Bye for now.